All right, welcome everybody. Great to have you with us today. We're going to get into some financial planning stuff to start off the program today. We're going to get into some of the business stories, political stuff a little bit later on. But I want to talk a little bit about the reality of a recession reality, and also how we go about battling bears. Oftentimes here on the program, we invite everyone to go and sign up for our personal CFO program, where, again, this is where we help people deal with situations like we're dealing with right now. These things sometimes are difficult for people to stomach, but it's the reality if you want to be an investor. And I know I've been repeating myself on this for a while. This is where wealth is built. That's the reality. So, many moons ago, I wrote a column entitled In Search of Recession. And in that, I was citing one of my favorites, one of the first reality programs, at least for me, was In Search of, with Leonard Nimoy back in the 1970s. Loved that show. It was Leonard Nimoy finding Bigfoot or UFOs or, Amelia Earhart. It was a cool show. I liked it. Anyway, neither here nor there. And the reason I was talking about search of recession, I was talking about how people are always clamoring, when is it coming? When's it going to be here? It will be here eventually, if it's not here now. But you're constantly looking for it. You're constantly searching for it when it's going to happen or trying to time it. That's when you're going to lose. Again, you got the Federal Reserve aggressively hiking interest rates. Again, we've given you our opinion on this. We think that they've gone much too far, much too quickly. And I have a funny feeling they're going to have to pivot. But again, this is because that's one of the Fed's jobs. Okay, one of the Fed's jobs is to deal with inflation. And they didn't do a very good job of it, did they? Telling us that it was intransitory when we all knew better. Anybody with half a brain knew better. Anyway, spilt milk now. We're going to cry over it. No, it is what it is. So I think that they're doing a bit of an overreach right now. I do. And I've never been a believer. We talked about that here in the program. I never understood why you would want to blow up the economy, put people out of work in the hopes of taming inflation. We've, again, discussed this. There are better ways of doing it. And some of the things they're doing outside of raising rates, reducing the money supply. Money supply has fallen off a cliff. And quite frankly, we're going to have to amp that up to some degree. Okay, when's the next recession? Like I said, could we be in it? We had 2 quarters of negative economic growth this past year. I don't know what the NBER is going to call. And again, I want to remind everybody that it took them a year to call the Great Recession. A year before they actually called that. Again, what causes these things? Again, ill-advised monetary policy. Again, that leads to disconnects in the system. We've had an extended period of time here in this country where we've had basically zero interest rate policy, free money. The proper pricing of money is very, very important. It's very important because, again, what happens is money flows when it's free to all sorts of far-flung ideas and nonsensical things. And it oftentimes could lead to misallocation of resources, commodities, other things that causes a disconnect. And again, take a look at the stock market. Yesterday here on the podcast, talked about the IPOs and SPACs. Again, I've seen this movie before. Okay. The funny thing is, you don't know when it's going to end. And people, they never want it to end. They think that the party is going to last forever, and it never does. And again, I'm thinking back in my mind, in my basement as a kid, at birthday party, and musical chairs where, everybody's trying to look at the corner of their eye when my mom was going to lift the needle off the record player so you could find your chair. Cheating if you did that. But anyway, the music stops. when it comes to these hype cycles. It does. And we know this, and I'm not able to time when the hype cycle is going to end. And quite frankly, possibly if we didn't have the war in the Ukraine, I think that also kind of sped things up to some degree. I don't know how. Maybe we wouldn't have had such a violent turn for the NASDAQ. Year to date, I think the NASDAQ's down 33%. Might have changed things a little bit, but eventually it was inevitable that many of these companies would go by the wayside. Eventually, you have to be profitable. Again, going back to the 1990s, it was one of the things that they talked about in the 1990s that I couldn't stand. Where it's a new paradigm. Earnings don't matter anymore. Yes, they do. And that's another thing about recessions and bear markets. Earnings matter. Okay, so what happens? What happens to the stock market during a recession? Again, equities peak months before a recession, but again, they tend to bounce back quickly. And I said, once you are in a recession, that's when the markets start to turn around. So everybody fearing, when's this recession going to come? Is it going to be here? Once you're in the recession, then guess what? You're going to start seeing a turnaround. And again, it may take longer than many think it will. I mean, we could be looking at, some people are, V-shaped recovery or U-shaped recovery, or maybe we'll be an L for a while, kind of flat line for a while. What that means, people, what that means is you have to accumulate high quality assets. It's always good to accumulate high quality assets, but it's always better to accumulate high quality assets when they're on sale. And again, I get this question sometimes, Chris, what the hell are you talking about? All the real money is made during bear markets. It's made during bear markets because you're putting the work in. You're buying the assets on sale. It gives you recessions and bear markets can really boost your portfolio over the long run if you participate. If you participate by dollar cost averaging, consistently putting money away, not trying to guess what's going to happen next, you're going to be successful. All of these yahoos here, these traders that you'll see on the business programs, we're going to cash, we're going to equities. It's exciting for, I guess, their investors, but it doesn't work. It doesn't work long term. It doesn't. I mean, you can basically track to see what works. High quality companies that pay an owner, meaning dividends, compounding interest, all of these things, and you'll be successful. You don't try to guess, it's going to be a rough year, 2023, I'm going to pull my money out. Okay, when do you get back in? Yes, it's an old saying, you're smart enough to be right twice. You're smart enough to know when exactly to get out and when to get back in. I'm sorry, I'm not that smart. I'm not that good, nor do I know anybody that ever has been. Again, you get Buffett and Munger, right, unloading their portfolios, going to cash because of a recession. Do they have cash? Are they constantly looking for another great investment? Will they dollar cost average if they see things come on sale? Yeah. I mean, there's that great line from years ago. He said, I pay a great sum of money for all of the positions in Berkshire Hathaway, all of my stocks to drop by 50%. What are you, crazy? No, because I'll buy more on sale. Economic indicators, again, questions that can warn of a recession. Inverted yield curve. Unemployment. Again, this is what's just making it kind of unique and different right now. And again, it's one of the things that drives me absolutely crazy. I mean, we got essentially full employment here in the United States. You could fall out of bed and be an absolute moron, wear different colored socks and different shoes to your job interview, and you're still probably going to get the damn job. Wages, continue to rise. How is this bad? How is this a horrible thing? Again, to me, the most important thing, and again, it's basically life fulfilling, is a job, finding purpose, going out there, building and creating something, doing something every single day, contributing. when that is taken away, that's soul crushing for many people. It is. We don't have that. Everybody keeps saying unemployment's got to tick up. It's got to tick up. Well, it's got to tick up. I don't know. I mean, I think in certain areas, absolutely. We've talked about good hiring and bad hiring. Good firing and bad firing here on the show, and the differences between the two. You don't, bad firings is when you have no choice but to lay people off because the economy's in the toilet and you're losing money. Good firings is where, gee whiz, you know what? We're getting rid of people that are unproductive, that are not doing their job. We're cutting expenses here so we can become more profitable, make investments in other areas, which later on down the line will lead to us hiring people again. Good firings, bad firings. Consumer confidence, another indicator, declining consumer confidence. Housing start numbers came out today. They're down, but not as much as they expected them to be down. And leading economic indices, again, all of these things point to a recession. How close are we? Another question. How close are we to the next recession? Don't know. Like I said, I'm being honest, people. I'm taking some of these questions from emails and whatnot. I don't know. Yeah, I think that we've been in one for some period of time to some degree. Again, it's only 2 quarters of negative economic growth. Okay, we already had that. Again, you get the employment aspect in it as well. Are we booming right now? No. But, again, we're not in the toilet either. So another thing, positioning one's portfolio during a recession. How do you go about doing that? And I'm being straight up honest with everybody here. I really don't deviate much. I really don't. We will, from time to time, tinker with bond portfolios more than we will stock portfolios during a recession. The reason being is, okay, or we might cut back a little bit more on the growth areas in our portfolios and look more towards dividend paying securities. Maybe. Again, everyone's situation is unique and different, but I'm not going to change our overarching philosophy. We don't do that here. And we look at individual companies. I don't look at market thesis, technicals of what the market's going to do. Certain sectors are out of favor. No. Is the company profitable? Does it have good management? Is it company paying dividends? Do we see good prospects for this company moving forward? Again, bear markets are going to come and go. Bull markets are going to come and go. You want to own high quality companies that are going to be able to survive through that. So no. Are we making adjustments? We always are. We're perpetually making adjustments in our portfolio. That we're always doing things. And like I said, everyone's portfolio at Markowski Investments, Watchdog on Wall Street, everyone's it's completely unique and different. There's no 2 portfolios alike. But our overarching philosophy in regards to the types of companies we own remains the same. So positioning in a stock portfolio. So, someone will say, well, you got to go more towards consumer staples and utilities. You should always have consumer staples and utilities in your portfolio. And again, you take advantage sometimes when they're out of favor. That's when you want to buy more of these. We talk about rotating assets. You got some of the more high flyers and technology companies that are in your portfolio that did well during the bull market. You should be constantly cutting and snipping and reallocating assets to other areas. It's what works. Okay. How should you prepare? What should you do to prepare for a recession? Listen, I go over this again and again and again. Recession's part of the terrain. You deal with the terrain. Some of the things you need to have if you want to be a good investor. We've talked about this ad nauseum here. You need to have patience and you need to have courage and stand in front of the chattering classes. Because I mean, you can flip from one business site to one picker to this analyst says this, and this one says this, and this one says you should sell everything. Who do you believe? Who do you believe? Have any of them been consistently accurate over time? No. If there was, I know about them. It just doesn't exist. If you've done your financial preparation properly, if you've got proper asset allocation, yeah, you might have years like this. They're going to happen. And guess what? This year might extend. It might extend for the next 6 months. It might extend for the next 9 months into next year. And again, it's like for some people, it's like water torture, but you should rather, it all depends upon your perspective and how you go about looking things. If you're saying, hey, you know what? I keep adding to these positions that are just not doing anything. They're not going anywhere. Eventually they will. And again, that's where real money is made. Some go over this, kind of rehash what I just went over. Recessions happen. They happen. Some people say that they are a necessary part of the business cycle. They're necessary because human beings get out of control. Because we have hype cycles. They happen. I've described recessions like it's like a cleansing. It's like a lymphatic system of the human body. You're getting rid of the garbage. You're getting rid of the gunk. Recessions, they don't happen often. More often than not, they're very short. But recessions have ranged from 2 to 18 months. 2 to 18 months, with the average lasting about 10 months. They've been a hell of a lot less impactful compared with expansions. The average recession leads to a contraction of 2.5% in GDP. Expansions grow the economy by about 25% on average. That's a great number if you think about it. Again, markets aren't doing anything. Economy's not doing anything. Your negative growth, you're down 2.5%, but you're buying high quality companies that entire time. Expansion comes 25%. What happens to your portfolio? You build wealth. You want to learn how to build wealth. This is how wealth is built. Again, this is some background about some things that you need to do. Again, for many investors, we're seeing this as well. There's a set it and forget it approach that certain advisors use, or certain people have taken on, where they're just buying indices all the time, the S&P, the NASDAQ. For certain people, I guess it's okay, and you can use that as a portion of your portfolio. But again, you need to be a little bit better of a stock picker. You really do. And like I said, certain sectors at certain points in time are going to outperform others. And yes, you can use ETFs to play certain sectors, and your ability to sell them and go into other sectors is important. So yeah, if you're just a S&P 500 investor, NASDAQ investor, and you're just buying those indices, it's going to be a little bit more difficult during recessions. And I would encourage a hell of a lot more active approach when it comes to investing. Quickly here on our old friend Jeremy Siegel, Professor Jeremy Siegel from the Wharton School of Business. As you well know, I've talked about him often here on the program. Mentioned to me, I read all of his stuff. He does an unbelievable job. Again, common sense when it comes to things. And he's talking about the talking about the overall bearishness in the market right now. And he seems to think that this is a great sign for stock investors. Now, again, historically, that would be true. There's no doubt about it. Historically, the more bearish that people become, the better off it is. It's showing a sign of a turn. And again, that's historically. He seems to think that stock market is undervalued. He'd say it's 10 to 15% undervalued. And he says it could run more. And he said he wouldn't be surprised to see 4,600 on the S&P by a year from now, by December of next year. Again, a little bit higher than the highs from last year, but again, it's not a bad year. And again, you can accumulate along the way. He seems to think there's a traditional metric of S&P earnings. The PE of the S&P was around 16. He feels because of the way things are going around the globe, and he's written about this, they should be around 20 rather than 16. Again, he talks about M2, money supply, and how the money supply, this is one of the things that we alluded to, we discussed here on the program, was way too out of control. All the ridiculous COVID spending, all the government spending, all the constantly throwing money at things. It was an absolute disaster. Absolute disaster. And it grew too quickly. And we told you that inflation was going to get worse. And it has. It's gotten much worse. And the reason being, again, too much money. Supply issues, I've discussed that. But the Fed has done a hell of a job, I'll credit where credit is due, in reducing that money supply to the point right now where Siegel feels that they've gone too much. Gone way too much. March of 2022 is when the money supply stopped growing. It started declining. We've had the largest 7-month decline in the money supply since World War II. It's too much, and we cannot continue that decline. Again, it's that stuff that causes a recession. And I got a kick out of this. He used an analogy that I use here. He said the Fed went 130 miles an hour in a 70-mile-an-hour zone and then slammed on the brakes too hard, hurting several industries, including housing. And again, things that we've discussed here on the program. Anyway, again, proper portfolio management is going to guide you through this. We talk about our personal CFO program. And again, take advantage and get to our website at watchdogonwallstreet.com, sign up for it and see what we're capable of doing for you. I want to move on. I want to talk a little bit about, again, another congressional spending blowout here. This is from the Wall Street Journal today. That's what I'm getting from it. Because again, I didn't have time. I didn't have time this morning. I do apologize to all of our listeners and viewers here. I didn't have time to read through the 3,000-page plus bill. I actually think it's actually bigger than that. I didn't have time. Sorry. Okay, what do we got? Another $45 billion for Ukraine, 40 plus billion for disasters like drought and hurricanes, 10% uptick military spending, 858 billion, 45 billion more than Biden requested. 772.5 billion in non-defense discretionary spending, which is up 6%. Again, it's a blowout. A lot of pork barrel projects in here. They do this all the time. The government supposedly shuts down on Friday. Remember, they continued it for a week. So they rush these things through and don't tell them. You can't tell me that anybody's actually read this. Yeah, I remember it's a movie. What's it called? Dave, I think the name, Kevin Kline. Kevin Kline plays he's a doppelganger for the president of the United States, and the president of the United States becomes incapacitated, and they put him in as president. And I remember it was a scene where he's sitting down, and obviously he was completely different than the existing president. He's sitting down with Charles Grodin, his buddy. I'm trying to remember the movie. Kevin Kline's character, Dave, in the movie, I think he owned an employment agency, and his best friend owned an accounting firm. And then they have Charles Grodin come in. They're going over the budget, looking to come up with some funding for various different things. And Charles Grodin's like, I can't believe this is how our government is being run as they're going through all of this waste. Anyway, Senate has to vote first, and again, I'm hoping that at some point in time you get some Republicans that actually stand up for what's right and block this thing and say no. We'll do it. We'll do a CR, but we're going to wait until next year till we get the House back. This is awful. But again, they the powers that be, the real powerful senators there, the ones that'll start calling you up and telling you, we're going to cut off your funding. You better do what we tell you to do, even though they're on their way out the door. They want this. This is Pat Leahy, Vermont. He's on his way out. Democrat, from funding for nutrition programs and housing assistance to home energy costs and college affordability. Our bipartisan, bicameral omnibus appropriations bill directly invests in providing relief from the burden of inflation on the American people. No, subsidizing stuff, Pat, doesn't help when it comes to inflation. Obviously, he doesn't understand how it actually works. He says the choice is clear. We can either do our jobs and fund the government, or we can abandon our responsibilities without a real path forward. Okay, that's just how ridiculous it is. Your responsibilities? How about your responsibilities to the American people and managing a budget, living within our means? We're $31 trillion in debt. Is that not a responsibility? Should we not deal with that? Senate Republicans said the increases in military spending represented Republican victories. Sam the Eagle, we got more guns. We got more guns. We got more boats. We got more missiles. Rawr. Great. Yeah. Said the deal broke a years-long bargain to ensure parity between increases in defense and non-defense spending. That is because inflation is measured by the CPI, up 7.1%. Since day one, I've insisted on increasing defense funding well above the president's requests without similar increases in wasteful, liberal, non-defense funding. That's Richard Shelby, who also he's in line to get hundreds of millions of dollars in pork from this. Some of the things that were left out of the package. Doesn't include a provision to provide Afghans evacuated to the United States after the fall of the government in Kabul a fast track to citizenship. Why the flip not? I'm looking around for arguments against this. So we get people out that would be killed if they stay there. These are people that risked their lives to help us in our last failed military adventure in Afghanistan, put their lives on the line, their families' lives on the line. And really, we can't get these people a passport? We can't do that? We call that, what I call it now, we called it back in the day. That's a dick move. Okay? It is. Okay? Plain and simple, dick move. It doesn't, we didn't get this, thank God. Doesn't reinstate the child tax credit. But again, the Democrats, they didn't get the immediate deduction for research costs incurred by businesses. Again, don't you want businesses reinvesting and doing research and development and helping? Why wouldn't you just allow them to deduct this? I mean, some of the tax laws are just, they're moronic. It really is. Yeah. Again, bill also is going to ban the downloading of TikTok on government-issued smartphones and other devices. Oh, that's great. If it's so bad and our government workers, adults can't have it on their phone if it's dangerous, then why are we still allowing it here in the country? Why are we allowing kids to be on this? I'm just saying, and I'm thinking about this for a second. You think the Chinese are probably smart enough to figure out, well, gee whiz, if government worker is at home and they're on their own little home network and the kids got TikTok, do you think TikTok gets sent to get on the network and then maybe get on the parent's phone and the parent works for the CIA? I'm just thinking. here. I'm thinking out loud. Is that possible? I think it probably is. I know that if I was, working in espionage, and that's what I would try to, give sort of some sort of functionality to. Anyway, our old friend VDH, Victor Davis Hanson. I've talked about him here on the program. Big fan of his work, historian, professor, and again, you want to. It's a great time to, nothing on TV. Pull yourself away from the TV sometime, and actually take some refresher courses at Hillsdale. They offer the classes online. You can donate if you choose to, but they're free. And Victor Davis Hanson's a great historian, especially ancient Greece and Rome, and I love studying that stuff. Anyway, he's got his 10 steps to save America. And again, when I'm being honest, I puts a smile on my face when people that I have a great deal of respect for, that have obviously got a lot more experience and been around a hell of a lot longer than I have, things that I've been talking about here on the show, I hear that they're saying the same thing, or they're echoing some of the things. Not that they're listening to me, not saying that, okay, by any stretch. I'm not that type of an ego, okay? But to think that we're thinking alike, it does, I have to admit, it puts a smile on my face. So he's got his 10 different things here to save America. Number one on his list is cut the debt. Again, I've been banging this drum forever in 10 days. We're at $31 trillion, 123% of GDP, completely unsustainable. We run annual deficits of $1.6 trillion. This is going to lead to higher interest rates. We're going to have to spend more on borrowing, which is going to lead to all sorts of other issues. Okay. We've talked about this here on the program. We have. And I've talked about some of the things that scares me, really scares me. What if, because, our interest rates are going too high, and we can't afford it anymore because we keep spending and our debt is too high. What if the government says, I do declare and I do decree that all retirement accounts are going to be nationalized, and all retirement accounts have to invest in U.S. government securities? Basically, they could take over, and they've already proposed this. Just so you know, this is not some sort of flippant conspiracy theory. You got that Professor Teresa Geralducci from the New School in New York. Yeah, after the Great Recession, they were all after that. Oh, yes, these 401ks are not good enough and markets are too volatile. We need to cut. Basically, they wanted to come up with Social Security Part 2, forcing everybody to give their money to the government. Lend your money to the government. Remember, Barack Obama started one of the most ridiculous things. Again, I remember making so much fun of this. It was so stupid. Remember the MIRA? The My IRA? Oh, yeah. Anybody got one of those? Just out of curiosity? How that went over like a freaking lead balloon, huh? Yeah, you had one choice. You put the money in the account, lend it to Uncle Sam. Anyway. And again, I like in his column here, he talks about Simpson Bowles. We blew a bunch of chances. We really did. Simpson Bowles, I'm going to give Obama credit to some degree. Okay. He and Boehner went head to head. Okay. Then they said a bunch of senators were going to meet together, have tea and crumpets in a room and figure it out. They couldn't do it. Then you had Simpson Bowles, and guess what? There was compromise, and it was rejected. Somebody needs to dust that thing off, and we need to go back to it. It's not perfect, but it's most certainly better than anything that we're doing at this point in time. And I've mentioned this before as well. As a taxpayer who's perpetually writing checks to the government, okay, I wouldn't mind. Do you understand? I don't like being, it's like in life, you don't like being ripped off or scammed. Who does? Who does? And again, sometimes people say, I don't even like going out to dinner anymore because I feel like I'm getting ripped off and scammed. I get that. I understand that. When I pay my taxes to the government, I feel like I'm getting ripped off and scammed because I know of all the wastes and all the fraud and how they go about budgeting things. If we could balance the budget and start paying down our debt, get some sort of fiscal sanity, I wouldn't mind as much. I don't like the feeling of flushing my hard-earned dollars down the toilet. That's all. Anyway, secure the border. We no longer have a southern border. There have been 5 million illegal border crossings just since Joe Biden took office. He intentionally destroyed immigration law for cheap political advantage. Nearly 50 million current American residents were not born in the United States. Well over 20 million and perhaps 30 million are illegal aliens. Old melting pot efforts at assimilation and integration eroded into the salad bowl metaphor that has just become tribalism. The left brags that demography is destiny as it cheers the changes in the electorate aimed at ensuring its political dominance, and simultaneously it smears conservatives who agree with its triumphalism as great replacement theory conspiracists. Again, we need to secure the border. There are some programs that are put forward. We also have to deal with the people that are here. And if his numbers are accurate, does anybody think we're going to be able to round up 50 million or 20 million or 15 million and send them back? I don't see how that's going to happen. Okay. I don't like the situation we're in, but it is the situation. And again, we're here to try to solve problems. We are. We're here to solve problems. Okay. This is where we're at right now. Let me try to explain this. Get all these throw them all out. You're having guess what? You're going to have a barbecue. You're inviting your friends over. And you're having a barbecue 4th of July, let's say. All of a sudden, all the weathermen are wrong. The apps are wrong. It's supposed to be a gorgeous day. You know, people start arriving, and guess what? The sky darkens, and it starts to rain. Now, you've set up outside, all this stuff. What do? You're going to continue to be outside in the rain? Or are you going to adjust with what's going on and have to say, you know what? We'll figure it out. We'll move it inside. We'll still have a good time. That's the reality, okay? The reality is these are the numbers. These are the numbers. It's not going to happen, okay? Yes, can we get some people to self-deport if we go with E-Verify, if we do not allow for any sort of handouts and giveaways? Abso-freaking-lutely. There are ways that we can getting people to self-deport. Again, that's why you come here. You're a magnet here either because you're getting free stuff or you can get a job. Number 3, tap natural resources. Again, no brainer. Oppose discrimination. Yeah, I like this. It talks, what's discrimination? Affirmative action. Affirmative action. This country, we're going to be at our best and our strongest when we're a meritocracy. The best people play best people. And we talked about that. You looked at the American soccer team. Okay. We had a very good team. And again, one of the better teams that I've ever seen us have, even though we only went so far. Again, that's our level. But again, you take a look. You take a look at America. Didn't matter what color you were. Didn't matter, anything. All that mattered was how good you are at what you do, and that's what he talks about when it comes to discrimination. Substitute of racial criteria for merit rather than aiding the poor of all races is creating a commissar for like drag on the economy, spiking racial and ethnic tensions and ensuring that every group will eventually, for its survival, go tribal on the basis of the same logic that applies to nuclear proliferation. Again, the remedy: just enforce civil rights statutes that prohibit racial discrimination and consider the Pavlovian shriek of racism as a revealing projection of racists. And again, he also goes, I cite Martin Luther King, content of character policy. Disrupt and reform higher education. Another thing that we talk about for a while, all too often here on the program. Revive the armed forces. He's basically saying that we're overcommitted. And because of the overcommitments, we're then under-resourced and we don't have any real strategy. And again, I think we need to change that. Fix voting. Yeah, I don't know if that's going to happen. For the life of me, I've said this again and again and again. Why is it so hard to show up on election day with an ID and vote? And if it's you can't go out of your way to do that once a year, then maybe you shouldn't vote in the first place. And again, he doesn't go nearly as far as I do when it comes to vote reform. Yeah, drain the swamp. Good luck with that. Americans distrust with the swamp administrative state or deep state. Call what you will. The Washington nexus of bureaucracies, media, and lobbyists has created a huge, unelected, permanent army of auditors, regulators, investigators, punishers, all mostly exempt from audit and accountability and without fear. Again, judge, jury, and executioner. Been talking about this ad nauseum for years. The red tape that they throw up. These are people that have never built anything nor created anything. Upend the welfare state. Yeah, spent some time on that yesterday. And number 10 on his list, again, restore norms. Fact is, few public norms are left. Rather than the current therapeutic obsessions that seek to divide Americans into binaries of oppressors and the oppressed, we are desperate in need of a civic education in K through 12 that acquaints all children and teens with American institutions, key events like Gettysburg, D-Day, familiarity with the Constitution, and the duties of the citizen. Again, enough with the social studies, back with the civics classes. Couple more stories today. I know we've gone very, very long today. Okay, bear with me. I want to get to a couple more things. Because I'm dealing with questions from people. Where'd you cover in the Twitter files to a greater degree? Be honest with everybody. You're getting enough coverage on this here, there, and everywhere. What do you want me to say? Huh? I'm not the slightest bit surprised by this. Come on, the left and big government's been working with the media for a long time. And it's just not about getting their favorite candidate elected. How many newspapers went out there and editorial boards went after George W. Bush and his decision to go into Iraq? How many? Come on, people. Okay. I just thought about this. You remember the George W. Bush and the fake but true documents? Dan Rather lost his job, and then he came back almost like as some sort of like high priest of journalism. They manufactured documents to prove a thesis that they had going. Fake but true documents. So again, this stuff with the Twitter, I'm not surprised. I mean, we all knew this was taking place. I know, and there's proof of it out there. But guess what? If a tree falls in the woods and nobody's there to hear it, does it make a sound? If you got a whole swath of the population that doesn't want what's right, that la, 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 they're cult members, what are you supposed to do? Again, if this was the opposite and it was the conservatives or libertarians that were controlling social media and putting out propaganda, I'd be pissed and I'd condemn it because it's wrong. Anyway, quickly on this, auto executives a lot more bearish on the short-term prospects for EV adoption than they were a year ago. For 2030, the median expectation for EV sales in the U.S. is 35% of the market for new vehicles. It's down from 65%. That's what they were predicting a year ago. Reality, the costs that are involved. getting the materials. Again, these car companies are saying we're being pushed in this direction, but we've got to find a way to make money on these things. And again, the price of these cars they're through the roof. They're through the roof. It is for most part, it's a big time luxury item. Again, we talked about this in the wrong way that they rolled out EVs, but anyway, neither here nor there. Bank of Japan shocked global markets. They had a bond yield shift. Yeah, zero interest rates going away in Japan. Not really. They're only allowing a 50 basis point swing below zero and above zero. But again, that's a massive change for Japan. And one more quick one before we got to go today. Yeah, yesterday was an absolute, how should we put it, shit show in the Bahamas with Bankman-Fried showing up in court saying he wanted to be extradited, but then he refused to be extradited. His lawyers didn't know why he was here. And again, I'm sorry, people. I think the whole thing is a show. Okay? The whole thing is a show. I'm not buying it. I think these guys are crazy like a fire. And I think his lawyers knew exactly what's going on. Anyway, again, long one today. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Have a great day.